I'm about to show you how I was able to help one of my clients get approved for over $240,000 in business funding for Eric and Anna. And I'm about to share with you a part that most people can't believe. We were able to do that with only under 4 hard inquiries. No tax returns, no bank statements, no profit and loss statements, no debt schedule, no complicated paperwork. So in this video, I'm gonna show you exactly how we did it, the sequence, the strategy, everything of the sort. But most importantly, I'm gonna show you exactly why it works. Whether you're a real estate investor or business owner, man, let's get into it. Okay, so let's talk about the client, Eric and Anna. So they are residential transitional housing developers. So transitional housing, think about they provide housing for people who are transitioning in life. We're talking about people who are battered women, people who are overcoming alcoholism, people who are overcoming homelessness, and they needed a place to stay in between wherever they started and going into real life. And their business model is actually very profitable. And how they get paid is through government contracts and insurance reimbursement. But just like in any type of business model, there's going to be the ups and the downs. The downside about this is the money doesn't come in the schedule. The money may come in on time one month and it may be later on the next month. So the predictability of money coming in is not. So the problem is, while they're waiting for money to come in, they still got expenses. They still got rent roll. They got payroll. And they got a whole bunch of operations that are still coming in while they're waiting for the funds to come in from the reimbursements and from government contracts. So now here's what put everything in motion. They were able to land a government grant. But in order for them to get the grant, they had to put the money up front, and then the government was going to reimburse them afterwards. The problem is that the grant was for $100,000 and they didn't have $100,000 in cash to be able to put up in order to get reimbursed. So they came to me and said, Julian, look, I need to be able to figure out a way how I could be able to get access to capital that is low cost so that I could be able to upfront the money so I can get reimbursed afterwards without me using my own cash to do it. In the past, they tried to get funding on their own, but they kept getting denied. Eric's credit had taken a hit due to a car deal going sideways, and they tried a whole bunch of things to try to improve it, but nothing was working. As we've talked about on this channel before, if you do not have the best credit, no matter what your situation is, it's going to be significantly harder for you to get approved for any type of fund. Even if you have a phenomenal business credit score, even though you may have net 30 accounts, you have Uline, Quill, Granger, even if you're making a significant amount of money in revenue, because the credit is not intact, not saying that you can't get approved, but you're going to have a harder time to get approved. And that's the problem that we're having. They had strong profits, but the owners didn't have the best credit, at least at that time. And it was crazy because they told me a story that before they came to me, they tried to go through somebody who they swore did the same thing as me. And when they got to him, the dude charged him $30,000 up front to be able to get them funding. The day before they were going to pay him $30,000, they did a background check on him. And the crazy thing, they did the background check and they found out he was operating under a fake name. He was like under FBI's most wanted. It was crazy. So now they're in a situation. They're sitting there with damaged credit. They tried to apply on their own. They got denied. They almost got scammed. They don't know what to do. But that grant opportunity was still sitting there waiting for them to take advantage of the opportunity. They didn't have all the cash up front. So that's where they came to me. And honestly, after that scam situation, they were very hesitant to trusting anybody, which is understandable. So they followed me on social media. They heard what I was talking about. They heard my experience, testimonials of past clients. And after about a few months of watching me online, they decided to reach out to me and see what their options are. So we were able to get on the call. I broke down the business model and how we get paid. There's a lot of people out there who are concerned about funders being scammish. I mean, I don't understand, because our business models, we only get paid if you get funded. If you don't get funded, we don't get paid. We run based on a commission business model. If I don't perform, I don't get paid. That's it. So now the big question is, how do we get them approved for over $240,000 if both the co-owners did not have the best credit? And although the business was making strong revenue and they did have bank statements, they did not have the tax documents on hand. So we were not able to leverage business revenue in order to get approved for the funding. So we had to lean on strong personal credit in order for them to get approved for funding. And they specifically said that they wanted 0% interest business credit. So now here's the strategy a lot of people don't talk about. Because they did not have the best credit, we added a father named Mike onto the business as a partner onto their operating agreement. And because we put Mike on the operating agreement, and then the operating agreement is basically a document that outlines all the roles and responsibilities of everybody in the business, but also in this case is going to outline the ownership of the business. And because Eric and Anna were the sole owners of the business, if they decided to apply for funding, they were going to have to put up their personal credit, and we were trying to avoid that. So what we did is we added Mike, who was the father, right? And we added him as 95% owner of the business. And this is just temporarily, just so that we can be able to go through the funding process. So now that Mike is 95% owner on the operating agreement, when we do go apply for funding, the banks are only going to pull Mike's credit as opposed to Eric and Anna. This is key because that majority of the banks that you go to, they're going to be pulling the credit of any owner who has 25% or more ownership. So the key is to be able to make sure that person with the strongest credit has significantly over 25% and nobody else has over 25%. So that's why we decided to do over 80% on Mike and less than 20 on everybody else. In this case, we overdid it. It just said, hey, Mike, you're gonna be at 95% owner, just so that there's no misunderstanding. There's gonna be no chance that they're gonna be pulling Eric and Anna's credit. So you might be asking, why did we choose Mike? Now, Mike had a phenomenal credit report. Mike had a FICO score of 776 on TransUnion, 769 on Experian, and 782 on Equifax, which is fairly strong, but what really made his credit report stand out is not his credit scores, but his actual credit profile. So Mike had 10 primary open accounts, and primary accounts are basically any type of accounts on a credit report that he used with his own personal credit to open and that he's currently paying on. He had 5 revolving accounts with basically credit cards, and he had 5 installment accounts, and those were in the forms of installment loans and auto loans. Of his revolving accounts, he had a little bit over $53,000 in available credit that he was able to use. He had an overall utilization of 21%, which is not amazing, but it was good enough for us to go through this process. He had 5 primary revolving accounts, so those were various credit cards with high limits. He also had 5 installment loans, and those were in the form of personal loans, mortgages, and auto loans. So he had a good mix of a little of everything on his credit report. Of his revolving accounts, he had a little bit over $53,000 in total available credit. His utilization was 21%, which is not phenomenal, but it was good enough for us to be able to go through this funding process. Typically, you want to be under 30%, and the rule of thumb is you want to be under 30%, but really to be optimized, you want to be totally under 10%. So 21% was not going to hurt us. But really what was the hero on his credit profile was the overall age of credit. Mike has had credit for a while. So Mike is probably in his mid 60s, early 60s. So he's had credit for a while. It was very obvious he was good with his money. He didn't have any late payments within the last 2 years. And he had strong, long credit limits. And banks are only going to approve you for a strong credit limits or allow you to go that high if you are good with your money. You're able to pay things on time over an extended period of time. But for Mike, he had an overall average age of credit of 10 to 12 years. So out of all the credit accounts he had, the average age is over a decade. And that's not even including his authorized user accounts. He had 1 authorized user account that was actually established in 1970. So the next step in the strategy was identifying banking relationships. For most people, this is where people go wrong. They simply apply online, cross their fingers and hope the best. And because they apply online, they're depending on the algorithm to make their approval decision. But when you go through a business relationship manager who knows your story, who knows who you are, and is able to advocate for you, everything changes. And because they went through me and my funding company, they were able to leverage the relationships that I already had with different banks, including Chase and Bank of America. So before we submitted any application, man, I was already on the phone with my bank reps, telling them the full story, tell them what they were looking for, what they were trying to do, so that we could build a story where the business relationship manager can actually advocate for them when the application goes to the underwriter. And because we have that backing of the business relationship manager, we have a greater chance of getting higher approvals compared to if you just simply applied online or they decided to walk in the bank without the banker actually knowing or unfortunately not caring. In additionally, having these relationships give us insight on these banks. in all the application process. We know which credit bureaus each of the banks pull from. We know what the banks are looking for in applications. We know what causes automatic denials. And overall, we're able to see a pattern of what causes the highest approval. And we're able to structure our lending profile based on that. So now step 3, we're able to leverage these relationships that we already had. So for Eric and Anna and their business, they were already had a relationship with Bank of America. They were already running all their business revenue through a Bank of America business checking account. So that was a home run ready to happen. So I called the business relationship manager. I met with Eric and Anna in person at the bank, and we were able to apply for 2 0% interest business credit cards. And we were able to get approved for $16,000 and $8,000 right off the bat by leveraging Mike's strong credit profile. And on top of that, the strong revenue that was already going through that business banking account. And the reason why that we decided to go to Bank of America first is one, yes, they already have that relationship, but then 2, because we wanted to maximize how much 0% interest business credit cards that we wanted to get, Bank of America has a business advantage program where you're able to get multiple business products using the same hard inquiry. So we're able to get approved for 2 0% interest business credit cards with only using 1 hard inquiry. So at this point, we're already $24,000 up. Now, they didn't have a relationship with Chase. So what we did is we opened up a business bank account and a deposit somewhere between $2,000 and $4,000. And that was the key that most people overlook. Most of these banks are going to be relationship based, meaning they don't want you to just go in and take their funding and run. They want to know that, hey, I'm here to stay. I'm opening up a business bank account. I'm willing to deposit some funds in here. Because look, if I scratch your back, I'm expecting you to be able to scratch my back in the future. And that's how the banks think. Because banks are more likely to approve people who already have a banking relationship or a deposit history within that business bank account. So after making the deposit, we waited about a week and then went through another business relationship manager and we were able to apply for 2 0% interest business credit cards. First one, because he had phenomenal credit history, we were able to get him approved for $41,000. Now, after he got approved, we went back for another 0% interest credit card and he got approved for $15,000. So now let's do the math. We're at 16, we're at 8,000, we're at 15,000, and we're at 41,000 altogether. So at this point, we're already at $80,000 with the bulk of it coming from Chase. Now, I'm going to be completely honest. This is super rare because most of the time you get multiple business products from Chase, they're going to give you a hard inquiry for each one that you apply for. But there was some type of glitch in the system. And frankly, we got lucky. We only got 1 hard inquiry. So it's kind of like how we went to Bank of America, got 2 business credit cards with only 1 hard inquiry. But now instead we were at Chase. I want to be frank. Now, this is an exception. This is not the rule. So do not be surprised if you go and try to apply for multiple products and get a hard inquiry for each one. I believe that there was some type of glitch in the system and we were able to get around it. But hey, we're not complaining about our blessings. So at this point, we got approved for Bank of America. We also got approved from Chase. So now the next bank that we go to is the one that everybody talks about, right? We went to American Express, meaning you're able to get truly multiple business products, really any type of products with American Express, and only get 1 hard inquiry. Now, here's the thing with Mike. He already had a personal American Express card that was about 5 or 6 years old. Now, here's how American Express works. Now that if you're already within their system, any type of product that you get for the next 4 products you get, they're going to use the same hard inquiry that you used before. So when you apply, they're not going to give you a new hard inquiry, new hard inquiry, new hard inquiry. Because I already knew that he had a strong personal credit card with American Express, it opened up the opportunity for us to get multiple products with no hard inquiry. They only did a soft pull, y'all. For this one, we did not use a business relationship manager. We applied online. Because I've been working with American Express so long, I know exactly what their application should look like, what type of entries we should have to be able to maximize how much we're going to get. And look, I want to actually go back and stress the importance of having that prior relationship. If he did not have that personal credit card with American Express and he went straight to applying for business credit cards, right off the bat without a previous relationship, he was probably only going to get approved for $2,000, maybe $3,000. With American Express, you always want to be able to make sure that you open up the door with a personal credit card or personal product first. And look, in a little bit, I'm going to break down exactly how much each approval was for each of the business credit cards that we got. But in total, we're able to get $154,000 just from American Express. By the time we applied, before we actually applied, We pulled their FICO credit scores. TransUnion, he was at a 776. Experian, when he was at a 769. And Equifax, he had a 782, which is pretty good. It was not amazing. It's not perfect. So I want to be able to break down exactly what this client had on his credit report, because look, I could say this person got $1 million in funding and talk about all the banks that we went to, but what really matters is what is actually being reported on the credit report, because that's what matters the most. And the first thing that people always ask about, what is the credit score that this person had? We pulled his FICO scores. We found that on TransUnion, he had a 776. Experian had a 769. Equifax, he had a 782, which is great. It is not perfect, but it was strong enough for us to be able to get strong approvals. But even with that, that's not everything. Right? Let's actually talk about what is actually being reported on his personal credit. What really made him stand out is his primary accounts. So he already had 10 open primary accounts on his credit report. These are accounts that are open in his name that he had to use his social security number to be able to open. So he had 5 revolving accounts in the form of personal credit cards with various credit limits, and then also 5 installment loans. He had 3 mortgages, 1 auto loan, 1 personal loan currently on his credit report. Now, like I said, of his revolving accounts, he had 53,500 and had a existing debt of about 11,000, which came up to about a 21% credit utilization. And the average age of all of his accounts was about 10 to 12 years. He also had an authorized user account that was established in the early 2000s, and it was already 20 years old. So that significantly boosted how much age was already on the credit report. So the true average age was over 20 years. But in regards to funding, I like to primarily look at what are his primary accounts, what are the age of his primary accounts on his credit report, without counting his authorized user accounts. And after setting and optimizing his credit profile to the best of our ability, and then also reaching out to our business relationship managers, coming up with our approval process, this is our final numbers. We started with Bank of America. We're able to get them approved for $16,000 and $8,000. Then we went to Chase, where we're able to get him approved for $15,000 and another $41,000. And then finally, we ended up at American Express. We're able to get him approved for $23,600. We're also able to get him approved for a travel card, which they were looking to be able to get approved for. It was the Amex Business Gold Card. So now this is a charge card. This is not a typical business credit card. They expect you to pay back whatever you borrow within 30 days. And now if you don't, the interest rate is going to significantly increase. But we're able to get American Express at a point where they had a 0% intro APR offer, which was probably about between 6 to 9 months. And then we're also able to get them approved for American Express business line of credit, where he was able to get approved for $27,000. Now, I want to emphasize, we did not have to use any tax documents. We didn't have to use any bank statements. We leveraged Mike's strong personal credit, our previous relationships with business relationship managers, but also Mike's relationships that he already had. So with all this, we're able to get him approved for over $230,000 in funding, so they could be able to invest more into their transitional funding or transitional housing business. So now you saw the full breakdown. Now let me break down the before and after very simply. Before, credit problems, getting denied, almost scammed, no way to the grant. Now after the process, $243,000 approved, under 4 hard inquiries, no tax returns, no bank statement, but most of all, credit protected. Now let's talk about the efficiency, because we planned out our strategy based on what relationships the client already had ahead of time, going to the right banks that did double dipping. Instead of getting 10, 15, 20 different hard inquiries, we were able to get them approved for the funding with only 4 hard inquiries. And even with that, the hard inquiries that we got, they were business products. They were from business products. So we were able to delete those afterwards without affecting their personal credit. And now let's talk about the risk. Mike came out clean on the other side. We knew which bureau each bank pulled from before the application application process. We knew which banks double dipped. We're able to get multiple products using the same hard inquiry. And all the products that we applied for do not report on his personal credit. And everything that we applied for, they're all business products, so it did not report on his personal credit at all. His personal credit report is intact. So even if he maxed out one of those cards, it's not gonna report on his personal credit. Unlike a personal credit card, if he got a $15,000 personal credit card, maxed it out, his score is going to drop, credit utilization is going to increase, and now he's not in position for any more type of funding. But on the business side, it does not report on the personal credit. So all in all, the big difference between the people who get denied and the people who walk away with $100,000, $200,000 in funding at a time is not talent, it's not a trick, and it isn't luck. It's having the right system in place and knowing how to position yourself before you even submit an application. So look, if you're serious about getting access to capital to invest in your business, to be able to scale your portfolios, click the link in the description so we can hop on a call and come up with a funding strategy just for you. We've helped clients get approved for $50,000, $70,000, $80,000, $180,000, over $240,000 in funding, with a majority of it without having to show any tax docs, without having to show any bank statements. We could do the same thing for you. So look, if you found this video valuable, don't stop here. Watch this video right here where I break down exactly why you're still getting denied funding even with a great credit score. So go ahead, click right here. I'll see you on the next one.